Today, I'm speaking with Romero, the moderator of T3 Live's Newsbeat VTF. Stay tuned to learn more about how this Argentinian-born Brazilian immigrant to New York went from being a coder to a day trader and now the leader of the Newsbeat VTF. All right, JR, so I want to start from the very beginning here. So tell me about your childhood.
Hi, Greta. Thank you for having me. It's a pleasure to be with you today. My childhood. All right. Well, I was born in Argentina in the late 70s during the military junta, and my parents were political exiles. I grew up in Brazil and became an immigrant to the United States in the late 90s.
All right, so tell me what it was like growing up in Brazil and then immigrating to the US and how your life changed.
Sure. I had a pretty free range childhood. If I was indoors, I was eating, sleeping, or injured, basically. And had just a wonderful childhood, a lot of friends, and not a lot of schoolwork, but it was a really remarkable childhood.
So you say that you were born in Argentina and then you went to Brazil with your parents. Tell me a little
Mhm.
bit about what your parents were like. Do you have any siblings or are you the only child?
Yeah, my father was an economist and a business owner. We have a long history of entrepreneurship in my family, dating back to my great grandparents. And on both sides, my grandparents and great grandparents were all business owners, entrepreneurs. My father was a very active investor, especially in the Forex markets. And my mother was a dance therapist and an educator. I have one sister who lives in Uruguay. She's a beautiful person. And I have two beautiful nephews that live with her.
All right, so you say you didn't spend a lot of time inside as a kid. So what were your hobbies when you were a child?
I was a pugilist from a very early age. So I was very much into karate and judo. And then in my teens, I got pretty heavily into boxing. And I've been getting punched in the head ever since.
Okay, do you still participate in boxing at this time?
The mileage has caught up to me. Uh, I'm in my late 40s, so
Mm.
the I hit things that don't hit back. So heavy bag, light sparring. I enjoy coaching my children. Both my sons are very avid enthusiasts of boxing and kickboxing. So trying to pass the torch on, so to speak.
All right. Um, so you guys, did you immigrate to the U.S. with your parents from Brazil or on your own?
No, I originally left the house at 17,
Okay.
and I was, believe it or not, I was a snowboarder, and I traveled around for a couple of years and couch surfed quite a bit. And then I was dating my girlfriend at the time had a college application to Columbia University, and I kind of stole it from her, stole it with permission, and applied and was able to get in. So I came at the age of 19 and have been kind of a Brooklynite ever since.
So you said your dad was an investor and such. So is he how you were introduced to the world of trading or the market?
No, no, not at all. I was actually I was actually working for a hedge fund on the technology side. I was a computer engineering major in university, and I through through my through my client interactions as a contractor, I was hired by a very important hedge fund and became really enthralled with the traders and how they saw the world, how they constantly analyze probabilities about everything. I mean, they would take bets on what time to the second the pizza guy would get there, and the quants would design like all these algorithms to try to figure out, which restaurant would deliver faster. So I was instantly hooked, and I had a couple of people that took me under their wing within that organization. And that's how I was initially introduced to trading and how I found a couple of my primary mentors.
So
Uh,
tell me more about that transition from the IT side of things at that company into the trading side of things.
yeah, so I was immediately paired with the quants because of my computer science background, but I really was sort of bored by it. I understood what they were doing, and I was fascinated by technical analysis, charting markets, economic catalysts, and it was a lot of futures at the time, and it was really just fascinating to watch how trading decisions were made. And I asked to be trained, and I was given a shot to to participate in that. And eventually, I started trading on my own, and it was a real struggle at first. Going from institutional to private trading. You don't have risk managers looking over your head. You don't have team meetings. And you don't have that kind of support. And when you go from trading institutional money to your private money, it's a very different type of feeling that is very hard for some traders to adjust to.
So, on that note, when you look back on your early days of trading for yourself, what would you say was the biggest mistake that you made?
I was an acute sufferer of Dunning-Kruger syndrome from my early days, in part because I had a strong foundation in math and science and a keen understanding of technical analysis. After a couple of years, I thought I was really a good technician, and I would say, a proficient technician. But as many traders who are proficient technicians find out inexorably, there is a vast difference between being a good technician, being proficient at reading charts, and actually being a trader. And so that transition was very difficult, very painful, and led down to some rabbit holes that took some time to untangle. But eventually, I really figured out a trading style that fit me and a methodology that worked for my personality. And it's been a great ride ever since.
So, on the flip side of what was, the biggest mistake you made on early on, what would you say was the best thing you did in your early days of trading?
My early days of trading, ask for help.
Mm-hmm.
Asking for help was the best thing I ever did. And then the second best thing I ever did, I think, was to realize early on that as a trader, you are truly on your own. No one else possesses your same personality profile, your same characteristics, your same view of the market. And I realized early on that I really needed to develop my own sensibility, my own strategy, and my own approach to markets to be successful.
So you mentioned earlier that you did have mentors at that trading firm or the institutional firm that you were working for. Tell me about those mentors and how they guided you and helped you shape who you are as a trader today.
Well, I think a lot of it had to do with helping to better understand technicals. But the most important thing, and this is one of the things I really try to help younger traders with, is developing a general understanding of markets. A lot of people, especially novices, have this technical analysis myopia where they tend to hyper focus on one or two signals they're looking for, and they're looking at that in a complete vacuum, ignoring the breadth and dynamics of the market, and without a really good understanding of relationships. Might those be currency relationships, commodities, or market breadth? I mean, there's a lot of different variables that go into that, but not having those things in check really makes trading the markets very, very difficult. I call it developing a nose, right? Developing kind of a scent for what's going on. Now, I'm not an intuitive trader. I'm a very analytical right brain kind of person, but you do have to develop a nose for what's actually happening. It's a feel for the markets that's that's quantitative. Like you can look at specific variables and understand that, but it's a very holistic type of understanding of what's going on, and I think it does a great deal of good in terms of increasing the probabilities of finding good trades.
All right. So you had those mentors early on that helped you establish that and learn that. But do you have any trading heroes? And if so, why do you look up to them?
Trading heroes. How long do we have?
As
Uh,
long as you need.
so the biggest living influence on me was David Weiss. But ultimately, the person I've looked up the most to is Richard Wyckoff in terms of being a pioneer in understanding markets and sharing that knowledge with the masses, helping people understand how markets work. He was the ultimate tape reader and analyst of markets, and he's really truly one of my heroes as far as trading is concerned. I know it's
Okay.
not a very original answer, but
No, I feel like lots of people will agree with you on that one. All right, and now I want to know about your routine. So take me through a day in the life of JR, the trader, and the VTF leader today.
mhm. Well, I wake up early around 5 a.m. Again, not very original. A lot of traders wake up very early. I like to get a really strong read on futures markets and the Asia session.
Mhm.
And I like to look at those relationships that really help determine the direction and the names that I'm looking to buy. We're right now, we have been in the past for the past couple of years in a very data-driven market with a lot of tape bombs and a lot of very sensitive moves to externalities and external macro data. So having a very clear understanding what those relationships are is incredibly helpful. I curate my charts. I tend to trade a basket of about 20 stocks. And so I take a lot of time to make sure I've mapped out levels and perform some solid multi-time frame analysis. And from there, I go through the news. We're very news event driven type of room, as is denoted by our name. And then I get ready for the morning call that we have every morning.
All right, so what keeps you motivated at this point in your career to keep doing this day in and day out? What are the things that you love about trading?
I love markets. I love what they do. I love what they don't do. I find the I find the dynamics of markets fascinating, and I love putting the puzzle pieces together in real time. I love the preparation. I love the execution. It's just something I love doing. So it's the sort of thing that just never gets old. And to be successful in this business, you really have to have a love of markets. It's very difficult to profit as a trader and to get ahead if you dread what you're doing and you dread coming to work every day. It requires a tremendous amount of focus.
As someone outside of the markets might look at the stock market and say, well, it's just a bunch of numbers, it's confusing, it's fake, it's not real. What made you fall in love with this and really gain that relationship with the market?
Yeah, so I think every person is drawn to certain values in terms of their lifestyle. I was never able to have a boss. Every business I've been involved with has been my own. I currently have three other companies that I have running in the background at all times, and one of them is a startup. So I'm constantly involved in activities that are highly entrepreneurial, and I love feeling the independence of being my own boss, and I love enterprises where basically, this is kind of a crude phrase, but you eat what you kill, right? You're responsible for your success and failure ultimately. And trading is the ultimate example of that. I mean, it's the type of job where you could come to work 6 days in a row and end the day with less money than you started. So that the markets reward success and punish failure in the most extreme ways, and that's just fine by me.
So we've talked about what you love about trading. What are the hardest things about trading for you?
The hardest things about trading is that over the years it can take a real toll on your family. If you have a spouse, a trader spouse will relate to what I'm saying. There's a lot of highs and lows in this field, and it's like every other business I own. There's a lot of highs and lows, and not a big emotional safety net or a financial safety net. So I think the hardest part for me has been to see this stress kind of seep into my spouse over the years. You know.
What are the techniques and things that you've done on your end to kind of balance that out and keep that from becoming an issue?
When I figure that out, I will let you know.
Yeah, constant battle.
Yeah, it's a constant battle. Exercise and making time for family is really important.
Mm-hmm.
I have a real type A type of personality. I'm a consummate workaholic, and I love everything I'm involved with doing. I love building things. I love projects, and I love constantly being involved in new endeavors. So for me, just being able to hit the pause button and spend time with children and with my wife is I think the cure for that.
On a different side of the kind of same coin, what would you say is the most frustrating thing about trading?
The most frustrating thing about trading is the the times where you find yourself trading in the wrong mindset, and where you're not executing well, and you're not applying discipline properly, and that really affects your risk management, your money management. And there's days where you end up green on the day, but you really don't feel good about yourself because not so deep down inside, you didn't execute properly, you're not trading well, and that usually is a harbinger of disaster to come. So those are the things that sometimes uh, dampen my mood.
On days where you feel like you're not trading well and you're not doing what you know you should be doing, do
Mm-hmm.
you approach the next day with a totally clean slate and say, okay, I'm going to just forget about yesterday and go ahead with what I know I should be doing? Or do those feelings, kind of linger and seep into the following days of your trading?
So I think that's cumulative. I have not met a single trader who, I mean, okay. So there's a difference between a red day and a bad day. Red days are just things that happen in the markets. The problem with having a day where you don't execute well is that it really starts to affect your mindset and your psychology, and that's a cumulative effect in both directions. So it's kind of like an injury, right? Like damaging a ligament or a tendon. Uh, you're not going to come back the next day without feeling that bruising. And the more you go down that path, the more brittle that metaphorical ligament becomes. So the main goal for me is to make sure that I'm doing the right things, taking the right actions, and cultivating the right behavior in order to buttress that as much as possible. I think that's one of the practices that I see most help successful traders is cultivating proper behavioral management constantly so that they may have green days, they may have red days, but their mindset always oscillates within a zone of safety. If you're having erratic behavior and you're not properly managing your emotions, you're not managing your behavior, it's going to be very difficult to perceive and analyze the market without the bias that's being imposed on by those behaviors. And so when I don't trade well, I'm concerned about that bias seeping into my trading and obfuscating the reality of what's happening in the markets with whatever possible bias that might sort of tinge. I know it sounds a little esoteric, but I think some traders might be able to relate.
You mentioned this, the whole, it's kind of a mantra among traders to take your emotion out of it and just be totally analytical. But where do you put yourself on the spectrum of 100% mechanical to flying by the seat of your pants when it comes to trading?
I've never met a trader who can trade without emotions. I
Mm-hmm.
think that is the biggest heap of nonsense I've ever heard in my life. I think you should trade with as much emotion as humanly possible. You're not a machine, you're not an algo, you're not a robot, you're a human person. I think what needs to be done as far as emotions is you need to learn to manage your emotions, not suppress them, so that in the big giant fruit bowl of emotions you can pick from, you're not picking up those rotten apples and taking a big old bite. That's seems to be the biggest problem. It's not the emotions we feel, it's what we associate with actions that are occurring and third order effects of those actions, right? So a lot of novice traders will have a red day and associate all kinds of negative emotions with that day, and then perhaps they did everything right that day. Perhaps they traded like a professional, but the setups didn't work. The loss of probability kicked in. They had a red day, and then the next day maybe they trade like a maniac and have a beautiful green day and associate lots of positive emotions with that experience, when in reality it should probably be the other way around. So choosing to manage which emotions you choose to take a bite out of, I think, is much more important than trying to suppress those emotions.
So, what would you say is a more impactful feeling for you? The feeling of losing or the feeling of winning?
Which is more impactful?
Mm-hmm.
The most impactful feeling for me is feeling a lack of control over my behavior.
Okay.
I don't like losing. I like winning.
Mm-hmm.
But I think that the thing that most terrified me throughout my career, because I've seen it so much, is traders who are not understanding how to manage their emotions and behavior, and you begin to engage in some very dangerous compulsive habits that lead to financial destruction, personal destruction, and everything else. So that's really what I try to avoid at all costs.
Tell me about the worst day that you've ever had in trading and how you recovered from that moving forward.
The worst day that I had in trading was, I believe I was trading, I think it was RIM back in the day, ticker symbol. Remember RIM?
Mm-hmm.
And they had some really bad news, and I was in a very heavy size. And what was bad about it is that during, as I was trading it, I knew that my risk management was off. I knew that I was in the wrong trade for the wrong reasons, and I stayed with it. So that loss was uh, particularly hard. It was a very painful loss.
What made it hard? The loss of the capital or that you feel like you were trading with the wrong strategy?
What made it hard was that I was completely overextended in engaging in behaviors that I personally frown upon. And traders were always looking, like they say the market is a forward-looking mechanism, but for a trader, you have a barometer and your performance is a forward-looking mechanism. We draw internally all of these different trend lines for how we're doing. And for me, seeing that kind of behavior produce those kinds of results created a real panic. And so that was probably why it was such a terrible day.
All right. And then what would you say is the best day you've had so far in your career of trading?
The best day, I've had a lot of good days. Um, that's a hard one.
If you can't pinpoint a specific day, just tell me when you think about the series of good days that you've had trading, what is it that you did during that session that makes that a good day in trading, not just a green day?
I That's a great question. So what I derive the most satisfaction from are trades that I plan really carefully. Trades where I see the market, I see the trade many days or many hours before it happens, and I'm seeing things develop very clearly, and my emotions, my behavior, my technical analysis are totally in line. I'm in the zone. My nose is attuned to what's happening in the market, and I have a very solid execution following the game plan. It's a hard feeling to describe when all of that comes together. It's very satisfying.
So I know you are a news flow trader. That's part of your strategy that you use. How have you been able to develop that skill, and what tools do you use day in and day out that allow you to do that well and kind
Mm-hmm.
of, beat others to the punch? Because if you're news flow trading, you've got to get in on the trade early before everyone else gets on the trade as well.
Sure. So there's two types of news flow we trade. One is breaking news, where you obviously need a very, very elevated edge on the rest of the market. And for that, we've developed our own tools. We also have some very expensive news feeds we use. But ultimately, you have to be looking in places where other people don't so you can get that chronological edge. But then the other really important part of news that I think a lot of traders overlook is just understanding those basic market internal relationships so that you can actually as macro news break, for example, a Bank of Japan action, how that's going to affect all the correlated currencies, the bond market, and equities. So having those kinds of understandings of how all of these relationships correlate and having the advantage of having that news real time gives us a huge edge in equity trading.
Mm-hmm.
So, and I would say that now that the market is less liquid and less dynamic than it was in 2020, having that understanding and being able to employ it gives us a huge edge in the market.
So you mentioned 2020, and we all know that the
Mm-hmm.
market of 2020 and the market of 2021 were markets that no one's really ever seen before. You had lots of retail traders in the market, the meme stock craze, all of the craziness happening, lots of liquidity. How have you seen the market change from then to now? And do you think now the kind of cycle we're in is a more normal type of market cycle?
Yeah, so we have these boom and bust cycles, and we've had them since there have been markets. It's very possible that we may have in certain sectors another lost decade. If you look at stocks like Microsoft, Cisco Systems, Verizon, I mean, how long did it take for people who were taking opening positions in 2000 to break even in Cisco or Microsoft, right? So I see that for certain sectors of the market, we're going to be perhaps sideways for 5 or 10 years. But I do think, you know, not to quote Jim Cramer, but there are constantly bull markets and sectors everywhere that are breaking out, and so our job is to really go where the dynamics lend the best opportunities in the market for us to
Uh,
trade.
During that cycle of 2020 and 2021, did you have to make any adjustments to your own personal trading style to be able to keep up with what was going on?
Not really. I was just taking much larger size because it just felt like every day was shooting fish in a barrel. Uh, it was one of the craziest times I've ever seen. But I didn't really change how I trade as a trader. I'm Trading is not sexy. It's not what a lot of people from the outside world view as trading. It's a series of transactions that are done very analytically with risk, reward, probability. I call those 3 points the three amigos, right? And it's constantly a never-ending series of decision-making um, points where you're employing those three variables and deciding what to do based on your technical analysis. So I was just taking much bigger size. I mean, there were certain months in 2020 where I would catch myself with size 10 times bigger than my usual tier size in years prior, and I had a sort of a gut check moment where I had to ask myself, are you taking this kind of size because the trades and the opportunities are here, and are you hitting the gas pedal because you can, or are you getting caught up in the euphoria? And I think I was doing that for the right reasons, but it really was a very unusual time, you know.
Yeah. So for new traders who started trading in 2020 or 2021 and are now experiencing their first bear market and their first down cycle, what's your long-term advice for those traders to make this a career and be able to navigate the ups and downs of what is the market?
Sure. What I tell my traders is make this your Rocky Four moment. Especially if you lost a lot of money in the beginning of 2022 after the market stopped, and I've spoken to a lot of traders with massive drawdowns. I tell people this isn't the time to give up. It's the time to regroup. It's the time, that scene in Rocky Four where he goes into the cabin in the middle of the Russian tundra, and you get that crazy exercise montage. This is we're in the winter in certain respects. This market has a ton of amazing opportunities. I'm not saying there aren't any, but it's certainly been a much more challenging market than a raging trending bull run that we had for 12 years. So what I tell people is to really capitalize uh, on the current situation, to really learn the ropes, uh, learn your craft, hone your skills, and really begin to understand markets. A lot of beginner traders are obsessed with setups, they're obsessed with charts, they're obsessed with these strategies. And in the era of YouTube, it's like drinking from a fire hose, right? Everyone and their sister has a trading YouTube channel, how to trade crypto this, and wiener coin that. I mean, it's insane. So what I want to see people in my room do is, as part of their professional development, is to really learn how markets work, and off of those fundamentals. And I don't really care what strategy they trade, as long as they understand how market structure works, how technical analysis works, how to properly to read a chart, how to understand order flow. At that point, you have the fundamentals you need to then go and find a strategy that works for you. And that's a very lonely process. I tell my people that trade under me in the room, that is part of the job that I can't do for you. No two people trade alike. You're going to have to find out what your style is, and that is where the bulk of the work is. That's where the heavy lifting is. The hours and hours after the market closes to sift through your trades, and understand what you're doing, how you're doing it, and how to improve. And that is something every trader has to do for themselves.
So you mentioned your room. You are a leader of one of T3 Live's virtual trading floors. So tell me what it's like to have hundreds of traders act on one of your ideas.
It's very bizarre to be talking into a microphone to hundreds and hundreds of people all day long. Um, I love the traders in the room. We're a very tight knit community. Um, we've formed many wonderful friendships. And really, what I like about the room is that it's a highly interactive experience. everyone everyone calls out great ideas, shares charts, shares really good setups before the market and during the market. So it doesn't feel like one of those services where you have a person just sending out trade alerts. It's a very interactive experience. I consider my job in the room to be sort of head technician. So I'll throw out a lot of trade ideas. We cover the e-minis, certain futures markets, currencies, and equities. And what my goal is to provide as much information in terms of how I'm seeing the market to people who may be hyper scalpers, intraday traders, or swing traders. And we have a wide variety of different trading styles in the room. Now, obviously, I take a lot of trades intraday. I a lot of people follow me on trades, which is certainly an experience that becomes you become more accustomed to, but it's still kind of weird. The problem is that, and I tell people this all the time, following other traders on trades, if you don't have like identical risk management, identical risk tolerance, and a really similar view of the market, is is a is an experience that may yield mixed results, right? No two people look at the market the same way, and I may throw an idea out there that may not look like a great setup to someone else, but maybe they take it because I said I would take it. And before they know it, they're exiting the trade at a loss, and then it runs 10 points without them because in terms of their tolerance for the trade, maybe they took too much size, or maybe they weren't seeing the same thing I was seeing, and they felt a great deal of discomfort. So I always tell people, look at trade ideas and look at setups, but really you have to execute your own risk management, your own money management, and it has to be a trade that fits your particular strategy. So
How would you say your own trading style has changed since becoming a mentor for traders who are in your room?
how my trading style has changed?
Or if it has at all?
I don't think my trading style has changed. I think that it's a great question. I I've been doing this for so long that I never had to actually say what I do out loud, right? I have a very specific methodology for trading. It's layered, so I'm looking at market structure uh, underneath everything, and then I'm looking at price action and patterns, and it's a very individualized type of approach to trading, and having to sort of vocalize what I'm doing to traders may have never traded that way was really challenging at first. But the advantage of it is having to actually explain what you're doing really crystallizes it in your own mind in a way.
Mm-hmm.
So it's been a positive experience.
How did you get involved with T3? How did you find uh, this company and then eventually become a leader of the virtual trading floor?
Yeah, so I've been trading on my own for uh, I don't know, 2002, and I've been in many rooms. I've been a moderator several times for several large rooms, and after like I think 2015, I decided I wanted to trade alone. A couple of friends on Squawk, but just in my dark, quiet cave. And then I found T3 because Newsbeat is basically a news service, and I just wanted to add another Squawk to my inventory of Squawks. And then I just fell in love with the community. I met great friends here, and the opportunity came up um, for me to run the room, and I was very happy to help and to trade with my friends. So it's been a very positive experience.
What would you say is your favorite thing about leading the VTF and working with all of these traders every single day instead of working solo all by yourself?
Pulling traders out of slumps
Mhm.
is by far the best feeling in trading there is. To help someone else end a vicious cycle and find what it is that they need to be doing, find their voice in the market, find their style, and finally succeed in the markets is a feeling that is very difficult to describe. It's incredibly satisfying, and it's the only reason I do it.
All right, so we've talked about good trades, we've talked about bad trades, but there's also moments when you're trading that can be a little bit funny. So tell me about the funniest thing that you've seen happen during a trade.
The funniest thing I've seen happen during a trade. Well, uh, was it the LinkedIn IPO? I think it was.
Mm.
Uh, my roof caved in
Oh my gosh.
and fell on my head uh,
Like in
mid
the middle
trade.
of the day, mid trade. Wow. All right,
And
so
part
your roof
part
falls
of
in
the
on your head.
rafter, yes,
Oh wait, continue. Keep telling me. Sorry.
and part of the rafter, once I was in the trade, I got kind of knocked out, and then a rafter fell and closed out my trade.
Oh
Hit my
my goodness.
F12 key. No, it's great. I took a profit, but
Okay,
it
there you
was
go.
just one of those funny things, life in
Yeah.
brooklyn.
Yeah, you can tell someone like, hey, I had success on this trade. And it wasn't even me. It was the
It
rafter
wasn't
from
even
my
me.
roof. That's
Faulty
crazy.
construction.
That's wild. All right,
Mm-hmm.
so then moving forward from that, what after that happened, what'd you do?
I started wearing a helmet, clearly.
All right.
um, yeah.
So you were in the IT side of things before you got into trading. What did coding teach you about trading? And have you taken any of those skills into this world?
um, what did coding teach me about trading? Well, I was being a Gen Xer. I came up in C and Java, mostly C, so it's not as rapid of a development language as what most people are using now for coding algos, which would probably be Python. Um, what I learned, especially from C, is to really organize my thoughts. Um, and so, I mean, I've always been an analytical person, but with computer programming, you really have to have a very clear outline of what you want structures and functions to do. So I think that was really beneficial in terms of helping me develop a discipline for breaking down information and developing analytical skills. So that was really helpful.
All right. So there's lots of conventional trading wisdom out there, kind of the rules of trading and what traders need to know. But what piece of that conventional trading wisdom would you say people should ignore?
What piece of conventional trading wisdom should people ignore? I think that really depends on the trader. Like, for example, diversification. Diversification is important for people who really are not experts in their product that they're trading, right? But if you're an insider in an industry, if you have a very strong grasp of what you're doing, diversification can actually hurt you more than it can help you. So I think it really depends on the kind of investor you are, what your risk profile is. But yeah, I've ignored all kinds of advice. Like the biggest one, honestly, is try to trade without emotions. I think that is one of the stupidest, most harmful statements that's ever been made. I mean, you tell me, have you ever met a trader who can trade without emotions? I'm still looking for that unicorn.
Yeah, I mean,
You
we're all
know,
human.
it's,
And I feel like emotion can give a trader an edge if you know what to do with it and how to act upon it. So, how have you been able to develop that in your trading and be able to use your emotions to your advantage instead of your disadvantage?
so I sit on a chair for 8 to 10 hours a day looking at markets. If I were to turn off my emotions for about 40% of my life, then that would make it a joyless existence. I mean, who wants to turn off their emotions for half of their living, breathing moments? That's not something I would particularly want to do. So, as a comment to that, I think the pursuit of emotional, I guess, there's a difference between stoicism and complete lack of emotions, but the idea that you can just turn those off and then flip the switch at 5 o'clock, I think is ludicrous. But I think it can give you a huge edge, not just in life, but in terms of trading, to have your emotions properly harnessed. Mindset, which is something we always talk about in the room, right? It's your general attitude toward toward life and toward trading. Mindset is developed through the proper management of emotions and behavior, right? If you need to come in on any given day and trade professionally, you have to practice those virtues. And to practice those virtues, you have to trade with a proper mindset. And that you can't develop a proper mindset without putting those emotions into gear, hitting the clutch and then hitting the gas. You have to be able to manage what emotions you engage and what emotions you disengage. It's not turning off emotions, it's picking which ones you're going to pay attention to. And the problem is this, Greta. Most traders are living in what I call Plato's cave, right? You know the allegory of Plato's cave. Basically, we all live in a dark cave without a clear view of the outside world and unaware of what reality looks like. Beginning traders never quite know whether their decision making algorithm is correct or not, right? So sometimes they'll make a great trade in terms of their P&L, but they took the trade for the wrong reasons, and the coin flip went up in the air, it turned up heads and they made money. So now they're reinforcing bad habits without realizing they're bad habits. But as the laws of probability will have it, eventually, if they engage in those behaviors, what will happen is that they'll start losing. So while they were being rewarded before for making bad trading decisions, now they're being punished for them, and it creates a great deal of confusion. And the same is true for the opposite, right? Traders who make often good decisions lose money, and that inner turmoil and confusion that's created by that particular paradigm is very toxic and confusing. Only when you can finally see with clarity what good and bad decisions look like over the long haul can you truly get out of Plato's cave. And once you're out of Plato's cave, you can choose which emotions you're going to take a bite out of in terms of the whole choosing what emotional response to engage in, so that you can finally break the cycle of associating terrible things with taking losses.
That's great. Tell me about your light bulb moment in your career. That moment when you thought, okay, yeah, I know what I'm doing, and this is for me.
That light bulb moment. I had a couple of really bad drawdowns, and my mentor sort of pulled me aside and kind of rebuilt me as a trader. This was when I started trading my own capital, and it was a mental reset, because I didn't have that exoskeletal support institutionally. It was just me, and I kind of fell apart. A lot of my traders, for example, I wouldn't do this because it's not compliant and it's illegal. But if I funded an account for them, theoretically, I know they would treat that account very differently than they treat their own money, right? And so I suffered from that for a little bit, and I had to go back and I had to recross that whole Rubicon and relearn how to trade using my own capital, and just to reapply all the risk management and money management I had previously learned, but now understanding that uh, just trading your own capital is very different. It's a very different experience.
Not everyone who wants to be a trader is successful at being a trader. This career has a lot of failure. So, what would you say unsuccessful traders have in common that causes them to be unsuccessful?
Failure is the default setting in people. It's not success.
Mm-hmm.
Um, I always hear, oh, 95% of traders fail. Don't 95% of coffee shops in New York fail?
Yeah.
And clothing stores? I mean, failure is not uh, the fact that most business ventures statistically are doomed to failure doesn't mean you shouldn't uh, engage in that venture any less that it means that you shouldn't engage in the venture of trading. You have to do the right things, and you have to it requires a great deal of tenacity. It requires a great deal of love of markets and belief in what you're doing, but so does running any business, really. Well, I don't see a big difference. I think that here's what I think the difference is. You experience a lot more loss aversion in trading than you do in other business ventures because you're constantly um, winning and losing then losing money, and you associate that with failure when in reality it just red days are a part of trading, and it's just something that you need to learn to get over. It's very difficult, unfortunately, just as it is very difficult to make money in the markets, but it's difficult to have any business succeed.
On the flip side of that, what would you say successful traders have in common?
All successful traders manage risk properly, and they manage money properly. I know this is the most conventional, boring answer there is. Like, I'm sorry, it's true.
If
There's
it's true, it's
not
true.
it's a simple answer to a very difficult problem
Mm-hmm.
because of the emotions involved. But truly, if you learn to manage risk properly and you learn to manage money properly, what you have to work on is technical proficiency and execution proficiency and just the management component. People call it trading psychology. I think that's a vague and stupid term.
Mm-hmm.
What you're really doing is managing behavior and managing emotions at all time. It's behavioral management that people need to learn, and it's deeply linked to technical analysis and to money management. Oh, those three things are integrally linked. I can look at a chart, right? Tell you where a novice trader entered. I can tell you where they gave up just looking at the chart, where they re-entered back through day highs, chasing a pivot, where they gave up again, and you could invert those trades and they would have made money. So having a really strong ability to manage your behavior as you analyze the markets is the skill that most traders fail to master, and I think that's why they fail out of the market.
So, for someone watching this who might be struggling to get on their feet trading and figure out their strategy and how to manage their behavior, what would you say is the one thing that they could do to help them get better?
Sure, that's a great question. First of all, you need to get help. Uh, this is not a field where auto being an autodidact is an advantage, right? Getting help from people who have been through what you're going through and modeling their success to some degree is important. And I think after that, the biggest problems I see is people taking way too much size, risking way too much capital. When you're risking capital in the markets and you don't have control over your behavior or your emotions, you're not just risking capital. you're risking psychological integrity. And the problem with that is that once you damage that muscle, it takes a very, very long time to recover. And so there's you know there's like four stages of trader development. This is another kind of trope in the trading world, right? Where you go from unconscious incompetence to mastery, right? The four stages. I'm sure you've heard of that. Uh, you have to really learn to size down, prototype a particular strategy, learn the execution skills, and have the ability to read charts in real time. A lot of traders are very frustrated because at the end of the day they look at a chart and say, "How did I not see that real time?" Well, it's because they're different skill levels that technicians have. A lot of technicians can look at an order flow chart and an actual chart and automatically tell you where the pivots are, where the trend lines are without drawing them, and have a really good feeling for what's going to happen next. A beginning trader doesn't have that. And moreover, they don't have the emotional discipline to be able to just drink from that fire hose of information and look at the market objectively, because they're so overwhelmed with past losses, current emotions, loss aversion, that making an analytical decision at that time, where you have to take all that technical information in and then manage risk reward, and then on top of all of that, execute properly, is a lot. So that takes a long time. That's not something that most people can learn in 3 to 6 months and say, okay, I got it, I'm going to be a successful trader. That takes years. But you know what? Developing a successful business, in other ventures has taken me 5, 6 years. So um, traders have to have maybe a longer view and a more conservative approach to the markets, learning, starting small, taking small size, and really prototyping. And finally, doing the work. A lot of traders will spend thousands of dollars of capital taking losses. And you wouldn't believe how many people don't journal, don't follow a trading plan, and at the end of the day, don't sit down to sift through the wreckage to figure out what went wrong. They just go back the next day, and their only concern is, quote unquote, getting back to even. That person never gets back to even.
Mm-hmm. So you mentioned things like journaling and having a trading plan. Those are, kind of the quintessential rules of trading that, experienced traders will tell younger traders that they need to do, and it sounds boring and it sounds like it's a lot of work. Why are those things so important to actually be successful at doing this, and not just something that an older trader says, but then they don't actually do on their own?
Sure. So trading plans are important because it's the business plan of your trading business. You can't run a business without a business plan. What makes you think you can run a trading enterprise without one? Your business plan your trading plan, excuse me, has to encompass all of the critical variables in your decision making, and they have to be rules you follow. When you're under stress, your decision making capabilities diminish greatly, right? There are no people I know that are smarter when they're stressed and taking a big trade. I don't know anyone who's smarter at that moment than they were 20 minutes before, when they were sipping on coffee, looking for the trade to develop with a game plan ready to go. The problem is, if you don't have that game plan going into a trade and you're trying to figure out what to do when you've blown past your stop and you're $8,000 in the red, making good decisions at that point is going to be very, very difficult. So a trading plan is really important because it's like a life vest. It'll allow you to stay out of bad decisions. It'll keep you uh, from expending too much capital and taking too much risk. And it's like a it's like a it's like a guiding light in the night. You can't trade without a plan, and Hmm. I go on like nightly rants about trading plans because it's one of those things where people trade without a plan and then can't figure out why they're losing money. But the other equally important piece of the puzzle is making sure that you're actually doing the work after the trading day to figure out what it is that you're doing that's working, what it is you're doing that's not working, and what you need to improve on. If you don't do that and you come back to trading the next day, you're going to have a lot of unresolved issues. Like every day, especially traders who take a lot of trades, like the way the human mind works is like you get a stimulus, right? And then you have to resolve whatever stimulus, whatever experience you had and assign it meaning, right? So if you have a day, you take three bad losses trading Microsoft, for example. Uh, if you journal at the end of the day and you say, okay, I took these three losses for X reasons. This was a good trade. This was a bad trade. Whatever it is, you've put the result from that experience in a certain box. You've compartmentalized it, and you have now the ability to come into the next day and hopefully course adjust. Right? If you don't do that work at the end of the day, there's two avenues. If you had a really green day but you're not sure why you had a big green day because you weren't following a plan and you didn't journal at the end of the day, that's Euphoria Avenue. The other side is if you had a red day, but maybe you had a red day for the right reasons, but you didn't properly assign the meaning of that experience and the causes for that red day so you could properly process that and manage those emotions, the next day you're going to be coming in with a great deal of uncertainty about what the outcome of the current day is going to be. So you're trading the present, but with the baggage of the past, right? You have to digest your day somehow, and I think journaling is one of those things that every trader has to engage in order to properly get past that day and be able to manage their emotions the next.
You've used this analogy a few times throughout our conversation here that trading is like a business, owning a business, developing a business, having a business plan, etc. You're a business owner yourself. You've mentioned that. You've started businesses, several of them. How has that experience influenced your trading and how you approach trading, different from others?
I've started 14 businesses, four of them have worked.
Okay.
So you have to, the biggest thing that starting businesses and ventures teaches you is to not let the success or failure of a certain project or a certain enterprise define you as a successful person. Successful people are successful in part because of their mindset. They have a championship mindset. They think like champions. And this is true for traders, it's true for entrepreneurs, it's true for athletes. They constantly behave in that mindset. I think it was Aristotle who said, if you want to cultivate virtue, you have to act in a virtuous way. Well, if you want to cultivate success, you have to act in a successful way with a mindship, the mindset of a champion. And so I think what having several business enterprises has helped me to do is to not look at any single success and failure as defining, and to truly embrace the process of doing things well.
All right. So we've talked about early mistakes you made in your career of trading, but when you look at your career as a whole, what would you say has been the biggest stumbling block that you've had?
The biggest stumbling block I've had is overworking myself. I tend to be very passionate about markets and very engaged in all my businesses, and sometimes I don't know when to, kind of let the foot off the gas, and so it's led to some underperformance in everything. So all things kind of suffer at once. That's been my biggest challenge, is just learning to slow down. I don't have a lot of gears.
One of the attractions of trading for people who look at this career and say, oh, I want to do that, that looks fun, is that it allows you some flexibility. So what has trading allowed you to do in your life that you don't think that you would have been able to do otherwise?
It's funny. I tell my wife all the time, um, I can show up to work whenever I want, any day I want. And her retort is to me, well, then why do you work 7 days a week? Um, I think for traders who value a lifestyle that is flexible, there is no better job. People who like to trade the open and be done by 10 o'clock enjoy a great deal of flexibility. And that was me for many years. Now with the room, I do very much enjoy helping other traders and doing market commentary. And quite honestly, it just doesn't feel like work. It's very, very enjoyable to me.
All right, so you work 7 days a week because you love it. And I'd guess that, after the bell rings at 4 p.m. Eastern, you're not done working. So say it's 4:30 p.m. on a Wednesday, you've finished technically your day of trading. What do you do the rest of that day?
I look through my trades. I have a ton of email from traders in the room. We do a lot of trade reviews, so looking through people's trade in the community. The community does a lot of anonymous trade reviews. Different traders send in their ideas on the day and what they did, and we review them together, sort of a post-mortem of people's days. So I look through those, and then I have a ton of charts that I need to mark up and just technical analysis I need to do preparation for the next day. After that, I take care of other business email correspondence, and finally hang out with my wife and kids. And that's a day in the life.
So technically, if technically trading is a Monday through Friday gig. The stock market is open Monday morning at 9:30 a.m. Eastern until 4 p.m. every single day, closes at 4 p.m. Friday. So after the Friday close, what do your weekends look like?
My weekends are great. My kids are all athletes, so they're off doing their crazy activities. My sons love wrestling and boxing, so they're all into that. And try to barbecue a lot of meat.
Mm.
I'll pop open a few cold beers and try to relax a little bit. But I do have a lot of side projects I'm constantly working on. So, I'm also constantly working on the weekends, especially at night.
Mm-hmm. So you've mentioned her a couple times, your wife. Tell me a little bit about her, how you met, and how it is having her as a support in your life as a trader.
Yeah, so I met my wife in 1997
Mm.
in college. I was dating a friend of hers,
Okay.
and I broke up with this woman, and then um, my my wife and I became friendly, and started studying in the library together. And one book led to another, and we started dating,
Yeah.
and we've been married for over 20 years.
Well, so you mentioned, the life of a trader spouse and how it can be stressful for her as well. But, the
Hmm.
spouse is also a support system for you as the trader. So say you have a hard day of trading. Uh, you didn't do things right. You lost more money than you needed to. Your risk management was off. Your behavior management was off. When you're done and you go maybe talk to her about your day, how does that go? How does she support you? And why do you take those emotions into your day, into your personal life, or do you try to leave it at your trading desk?
I think the biggest mistake a married trader can make is to hide failure from their spouse.
Okay.
It is one of the most perilous things I've seen in trading. Traders who are married and have big losses or negative experiences in the market and try to keep that under wraps. I, she doesn't need to ask me how my day went. She knows just by looking at me. Talk about a nose for the markets. My wife, she knows exactly what's going on, And she's seen it all. She's seen the business successes and failures in the past, the market successes and failures, and she's very supportive. She's very old school. She came from an Orthodox Jewish family in the Bronx, and she's one of those kind of tough, tough love type of broads. But she's fantastic.
And then you said two sons, right?
Two sons and a daughter. Yeah,
Oh, okay. How old are your children?
my kids are 12, 14, and 16.
All right, so you're in the thick of teenage kids. Um, have you taught any of them about trading? Do any of them have an interest in becoming traders in the future like you?
Yeah, they my youngest son wants to be a chef and a day trader.
Okay. Wow.
Um, yeah, and my middle son has a key interest in trading as well. And during the pandemic, there was time when they were home, and they would watch the markets with me. They're fascinated with all the news squawks, and to them, my rig looks like the cockpit of an F-16. So they're pretty fascinated.
So, if you're thinking about teaching your children about trading, how would your advice to them maybe differ from just someone random, not random, but someone in your trading room? That personal relationship with your children and that obvious desire that you would want to see them succeed. How might that advice that you give them and the guidance you give them kind of differ?
So my two older children are very risk averse, which is probably a good thing if you're a beginning trader. My youngest son is a total maniac, so he would be my concern. I would really try to instill very positive habits early on. The you know Trading with integrity. People talk about discipline all the time, but what it is trading with integrity. You have to all of the things that make up that power punch, the tendons, the ligaments, the bones, what makes that fist. You have to be all unified. That's what integrity means, right? Integrity is a word that we use to talk about a personal trait, but in trading with integrity is having all of those elements: emotions, behavior, analysis, all coming together to produce a clear and concise execution that follows a plan. So for my youngest son, right, as an example, and I deal with this with traders all the time. I deal with a lot of traders every week. They're not trading with integrity. They have a plan that looks fantastic on paper, but they're unable to mold a behavior that conforms to that trading plan because their emotions are so spent from years of failure or insecurities or whatever else it may be. And so that that holistic that holistic power punch that needs to come together to actually be able to execute properly as a trader never comes together, right? That's really what discipline is. And for someone who was dear to me like my son, teaching them how to trade would ultimately come down to that one word: integrity. Bringing all of those elements that are necessary to properly trade professionally under wraps. And emotions for him would be the biggest one. And like when I look at traders, just talking to them on the phone or emailing, I can tell, okay, this person has the right mindset, they have the right personality, they just need they're just choosing the wrong entries. They have a technical problem. And then another person can read a chart like a pro. I mean, they're better technicians than I am, but when it comes to execution, they have so much pent up PTSD, or they have such a terrible mindset that they're unable to properly execute. So they're good technicians, but they're terrible traders. And they have to cross that Rubicon in order to really reach that point.
So you obviously love this. You love the markets. You're enthralled by the markets. You love trading. So do you ever see yourself actually stepping back from trading and truly ever retiring?
Retiring? No, we don't talk about the R word.
Yeah.
No,
All right.
that's a
So,
dreadful question. Why would I ever want to stop doing this?
well, some people are working and looking forward to retiring every single day. So I think it says a lot about you as a trader and this career that you don't ever see yourself stepping back from it. So you won't retire, you won't ever fully stop. But do you ever see a point in your life where maybe you'll become less of an active day trader?
Yeah, so when the market's really hot, I tend to trade very actively. And people talk about over trading all the time. Oh, you're over trading. You're taking too many trades. Listen, when the market is there and you're doing the right things and you're trading well, there is no such thing as over trading. You should trade as
Mm-hmm.
much as possible.
Yeah.
However, in my um, as I've developed as a trader and gotten a little bit older, I've learned to read the market a little bit better. The whole thing about the nose for the market, and know which days are days where I really need to just slow my roll, take it easy, slow down, and which days are the days where I need to really hit the gas pedal. And sometimes it's weeks and weeks on end where the market is choppy, the opportunities aren't there. And so I just wait. I call it waiting for the green bus. Uh, that being said, as I get older, I see the appeal in swing trading and taking longer term trades. We take a lot of longer term trades in the room where we hold a position all day, many days, sometimes weeks. And I definitely see myself in maybe in a couple of decades is really not wanting to be scalping Tesla for a couple of minutes and just letting letting my style just kind of slow down a little bit, for sure.
So for someone who may be watching this and is now interested in learning more from you, working with you, letting you be a mentor to them, how can
Mhm.
traders who may be interested get the opportunity to learn from you?
Sure. So everyone who joins the room, I encourage them all to send me an introductory email
Mm-hmm.
so we can set up uh, a trading plan for them that fits their trading style and their needs. And then I review anybody who wants their trades reviewed at night gets a trade review, technical critique, talk about psychology all the time. To me, quote unquote, trading psychology and technical analysis, when it comes to finally trading, are linked at the hip, right? And so we will literally do a technical breakdown, and when I ask people to submit their trading journals on the day, we have a very specific format in the room where I want them to literally tell me how they were feeling as they were taking that trade, so they can start to examine how to best mold their behavior and link their technical analysis and their behavior so that they're not looking at a chart completely disembodied from what they're feeling, you know? So that's really what I encourage traders to do. And I consider myself a resource. And it's not just me. I mean, there's hundreds of traders in the room who are actively sharing their knowledge, helping each other. Our community is very interactive. Traders reach out to one another. They have accountability buddies in the room. And so when you join the room, you're joining a community, and it's very interactive with me and the other traders. This is not one of those rooms where we're sending out trade alerts and then you're on your own. We really work with each trader to figure out what their strengths and weaknesses are, so they can start to develop that personalized strategy that works for them and that style.
All right, J.R. Romero, thank you so much for joining me today. And I hope some traders got something good out of this and will join you to learn more about themselves and their trading.
Thank you, Greta. Thank you for having me.
If you want to learn more from JR and become a member of his trading room, having him review your trades and teach you to be a better trader, There's a link in the description box of this video to sign up for the Newsbeat VTF right now.